I want you to keep this in mind as we talk about the potential for them revaluing the price of gold and why all of these countries are massively buying it, okay? So this is 1974. America's objective, the official transcript of the meeting quotes Enders as saying, was to move towards a demonetization of gold to begin to get gold moving out of the system. Kissinger asks, why is it against our interest to have gold in the system? Enders replies, it's against our interest to have gold in the system because for it to remain there, it would result in being revalued periodically. Although we still have substantial gold holdings, a larger part of the official gold in the world is concentrated in Western Europe. Well, now it's concentrated in the East. Anyways, he says this gives them the dominant position in world reserves and the dominant means of creating reserves. We've been trying to get away from that into a system which we can control. Kissinger says, but that's a balance of payments problem. Here's the cool part. Yes, but it's a question of who has the most leverage internationally, Enders answered. If they have the reserve creating instrument by having the largest amount of gold and the ability to change its price periodically, they have a position relative to ours of considerable power. All right. So now we talk about gold in the unit and gold being used to back a new system. And who's buying all the gold? Oh yeah, it's the central banks, more so than at any time in history. And what is gold? We know it's the only other tier one reserve asset. And what are they doing? They're all repatriating it and bringing it home. And what's happened in China over the last 6 months? Well, they've pushed silver $4 an ounce higher than it is quoted in the West. So isn't that really the price? So if you are a sophisticated trader or an idiot trader on Goldman Sachs or JP Morgan, well, you got 50 million ounces, you can sell at a $4 premium. You just cleaned house. You just made $200 million. So you're happy about that, but that 50 million ounces, that ain't ever coming back. Never, never, ever. And so the point is that is the price. So when you talk about they knew this in 1974 and gold is held on every central bank balance sheet in the revaluation account, and Enders was telling Kissinger, we can't let them have the gold, they can revalue it. Well, what if that's the ultimate plan of the BRICS nations? What if they're the ones buying all of the gold, not really telling us how much they have been buying? What if Russia's been buying that much under the table for a long time? They're not telling us how much they produce at all, nor is China. The IMF said China has way more gold than they tell us. Your buddy Alistair, who I think is one of the smartest guys in the world, says they have 40,000 metric tons, not the 2,700 metric tons that they tell us that they have. And the head of the IMF said they got way more. The lead analyst for Bank of Montreal says they have. Well, what if all of these countries ultimately plan to revalue gold just the way that Senator Loomis talks about? Now you have a dominant position to create a new system or to create reserves. So I think it's very interesting when you see that these countries are accumulating the gold the way that they are. It's no small thing. It shouldn't be underestimated. It shouldn't be dismissed. It's a very big deal, whether it be draining the exchanges or just outright buying, or like we said last week, China going all around the world, according to Sean Kunkun, the head of Dolly Varden Silver, and buying up all the concentrate and all of the doré bars from the miners and then sending it home and refining it so the metal doesn't come off of an exchange. It doesn't come off of a platform that allows the price to be affected or the volume to be tracked. This is a high stakes game and we are losing and they are winning, and they are using our stupidity of suppression of the paper markets to do so. It's a big deal, Dunnigan. It's a really big deal.
To truly understand the value of gold and silver in today's financial climate, it's crucial to dig deeper into why global central banks are accumulating these metals at unprecedented rates. Let me take you back to 1974, when there was a clear shift in America's approach to gold. And this should frame everything we are discussing about revaluing gold and why countries like China and Russia are aggressively buying it today. In 1974, America's official policy was to move toward the demonetization of gold. This is evidenced by a transcript from a meeting where Enders, a high-ranking U.S. official, explained that keeping gold in the system would require periodic revaluation. In other words, gold would constantly be reevaluated and could potentially give more power to those holding the most reserves. At that time, Western Europe had the largest share of the world's official gold reserves. So what was America's objective? Simply put, it was to get gold out of the global system to maintain its own control over the reserve currency system, the U.S. dollar. Henry Kissinger, who was deeply involved in shaping U.S. foreign policy during that period, was part of these discussions. Why is this important now? Because we're seeing history repeat itself, but this time the power dynamics are shifting from west to east. The very concerns that U.S. policymakers had in 1974 are now the reality that nations like China and Russia are using to their advantage. While the U.S. succeeded in pushing gold out of the system for a time, today we see nations like China, India, and Russia aggressively buying gold. And they're not just buying gold to hold it. They're strategically positioning themselves for a new global financial order where gold could play a central role in the valuation of currencies and reserves. Central banks across the globe, particularly in emerging markets, have recognized gold as the only Tier 1 reserve asset besides US dollars. And what are they doing? They're repatriating gold, bringing it home to shore up their financial positions. For instance, China has been quietly pushing the price of silver up by as much as $4 per ounce over the last 6 months, compared to its quoted price in the West. You know what that means, right? The actual price of silver is what the Chinese are willing to pay, not what is listed on some Western exchange. This manipulation of the Western paper market is part of a larger strategy that has global repercussions, yet the mainstream media barely covers it. And here's the kicker. Big players like Goldman Sachs and JP Morgan can still make massive profits by selling silver at those higher premiums. But once that silver leaves the vaults and heads east, it's never coming back. This means Western banks are losing control over the market while profiting in the short term. The long-term game, however, belongs to the East. The 50 million ounces of silver they sell for a quick buck are disappearing into China's coffers, never to return. This is a high-stakes game, and frankly, we're losing it. So when people talk about the revaluation of gold, it's not some far-fetched theory. The blueprint has been in place since the 1970s. What if the BRICS nations, Brazil, Russia, India, China, and South Africa, are planning to revalue gold, positioning themselves for a world where the US dollar is no longer the undisputed global reserve currency? It's a plausible scenario. After all, Russia has been secretly buying gold for years, and China's gold reserves are likely much larger than what they officially report. According to some analysts, China could have as much as 40,000 metric tons of gold, far more than the 2,700 metric tons they claim to hold. If these nations are quietly stockpiling gold while suppressing the paper markets, we could be on the brink of a major financial reset. When the time is right, they could revalue gold to a much higher price, effectively resetting the global financial system in their favor. By holding the most gold, they would have the dominant position in creating new reserves, just as U.S. officials feared back in 1974. This isn't just about the price of gold or silver going up. It's about nations positioning themselves for a new world order, where financial power is determined by tangible assets, not fiat currencies like the US dollar. And while all of this is happening, Western investors and governments are either asleep at the wheel or actively suppressing the real value of these precious metals.
36,000 ounces a day at current prices. It's a 600% increase in what they were doing. And when you put that in context to what we are seeing coming off of the exchanges, it's part and parcel with what I've been screaming over and over and over again. Yeah, I say the same stuff. I do, but it keeps happening and it keeps happening and it keeps happening. And if you don't pay attention, you miss it. The recent data as of August 31st shows us that when you talk about the amount of silver that's been taken off just the LBMA in the last month from July 31st to August 31st, July 31st, they call it the float in London. There's 800 million ounces of silver in London on the LBMA. 500 million belong to the ETF. So the float, the 300 million, are the ounces that are available to be delivered that back the bars. So when we talk about the float at the end, the last day of July in 2024, that float was 336 million ounces of silver, or 10,440 tons. At the end of August 31st, 1 month later, it's 309 million, or 9,599 tons. In other words, 27 million ounces, or 8.1% of all the silver in the London vaults was drawn down in 1 month, in the month of August. And so when you talk about how fast this is happening, It's ridiculous. And then you look at COMEX, and since November 2020, when I started on talking about this with you, that's about when I started talking about all the deliveries coming off of COMEX that had never happened before. Never. We've seen in gold, 2,136 tons of gold have stood for delivery, and 24,072 tons of silver have stood for delivery. And I remember I said that just in terms of the amount of 336 million ounces is 10,440 tons. Well, since November of 2020, we have seen this massive amount of 24,000 tons taken off. So you're talking, almost what are we talking? 800 million ounces. That's almost the exact amount that India has imported in the last 3 years. And so this is something that should not be overlooked or taken lightly. That doesn't even take into account those numbers off of COMEX, the exchange for physical, which we've talked about, where massive amounts of gold and silver are purchased in the West and delivered in other parts of the world, usually London, but there is that little known contract that was developed in 2015 that allows metal to be delivered to Brinks, Hong Kong, which is a COMEX facility, which then it's usually in the kilo bars, the mini contract on COMEX or the mini kilo bars. Well, that's what's traded on the Shanghai Metals Exchange. So they can buy and stand for delivery on the mini contract and send it to Brinks, Hong Kong, where then who knows where it goes, probably gets trucked over to the Shanghai Exchange, which deals in kilo bars. The point of it is that all of these countries understand what is happening, and they understand that the suppression of the Western market is that's how they win the game. And they're just flaunting it right in our face, not only by taking delivery, but saying, yeah, we're going to buy 36,000 ounces a day for the next month. This is what they're doing. They're using the suppression of the Western paper market against us. I've been saying that forever, and they are draining the exchanges.
As the world watches the dramatic shift in global financial dynamics, few fully grasp the magnitude of the changes taking place. We're not just talking about small fluctuations in commodity prices or the occasional dip in the stock market. What we are witnessing is the quiet but steady repositioning of gold and silver as the backbone of global financial power, driven largely by Eastern nations like China, India, and Russia. This trend is not simply about diversifying reserves. It's about preparing for a seismic shift in how the global economy operates. In Part 1, we discuss the context behind this growing trend and the historical significance of gold, particularly the Western decision in the 1970s to move away from the gold standard. But now in this part, we delve deeper into the implications of this silent gold rush and what it could mean for the future. For years, we've been living in a world where fiat currencies like the US dollar have reigned supreme. However, with each passing day, it becomes clearer that the foundations of this system are starting to crack, and gold and silver are emerging as the go-to assets for those looking to hedge against an uncertain future. The signs are all around us. Take, for example, the massive drawdowns in silver and gold reserves from the LBMA, London Bullion Market Association, and COMEX, Commodity Exchange. These exchanges are the beating heart of the Western precious metals market, and they have seen unprecedented levels of physical metal being taken off their books. Since November 2020, over 2,136 tons of gold and 24,721 tons of silver have stood for delivery on COMEX. To put that into perspective, these numbers are equivalent to the total amount of silver that India has imported over the last 3 years, approximately 800 million ounces. What's driving this frenzy of physical metal withdrawals? Well, for one, we have to look at the broader macroeconomic picture. The value of fiat currencies is eroding at an alarming rate. Central banks, particularly in the US and Europe, have been printing money like it's going out of style in an effort to keep their economies afloat. But every dollar, euro, or pound they print is backed by nothing more than promises. These currencies are not tethered to any tangible asset, which means their value is highly susceptible to inflation and devaluation. And as inflation continues to rise, so too does the appeal of hard assets like gold and silver, which have intrinsic value and are immune to the whims of central bankers. The situation in the East is especially noteworthy. China, for instance, has been aggressively buying up gold and silver, but they're doing it in a way that avoids affecting the spot price. Rather than making large purchases on the open market, which would inevitably drive up prices, China is quietly acquiring precious metals through alternative channels. They're purchasing unrefined silver and gold from miners around the world, refining it at home and keeping it out of the Western exchanges. This method ensures that the global price of gold and silver remains artificially suppressed, even as China accumulates massive quantities of these precious metals. What's the long-term play here? China, along with other BRICS nations, is preparing for a future where gold and silver will be the primary reserve assets used to back their currencies. This is a direct challenge to the US dollar, which has been the world's reserve currency for decades. But as the dollar's value becomes increasingly volatile, nations like China and Russia are positioning themselves to emerge as the new leaders of the global financial system. And they're doing it with gold. But it's not just China. Russia, too, has been quietly accumulating gold for years. According to some estimates, Russia's gold reserves may be far larger than what they officially report. The same can be said for China. The IMF, International Monetary Fund, has suggested that China's gold reserves are likely much higher than the 2,700 metric tons they claim to hold. Some analysts, like your buddy Alistair MacLeod, even estimate that China may have as much as 40,000 metric tons of gold. Why are these nations being so secretive about their gold reserves? The answer is simple. They are playing a long game. By keeping their true reserves hidden, they avoid spooking the markets and causing a sudden surge in the price of gold. But make no mistake, these countries are accumulating gold at a rapid pace, and when the time is right, they could revalue gold, effectively resetting the global financial system in their favor. The implications of such a move are staggering. If gold were to be revalued by the BRICS nations, it would not only boost the value of their reserves, but it would also drastically reduce the value of fiat currencies like the US dollar. This would send shockwaves through the global economy, forcing nations around the world to reassess their financial strategies. Those who are unprepared for this shift could find themselves at a significant disadvantage, while those who have been quietly accumulating gold and silver will be in a position of strength. And let's not forget about silver. While gold tends to grab the headlines, silver is often the sleeper asset that gets overlooked. But that's a mistake. Silver has a wide range of industrial uses, from electronics to solar panels, which means its demand is only going to increase in the coming years. At the same time, silver is much cheaper than gold, making it an attractive option for investors who want exposure to precious metals but can't afford the high price of gold. The smart money knows this. That's why silver stocks, though still cheap, are starting to gain traction. Over the weekend, we saw silver prices rise above $30 per ounce. And while silver stocks are still below their 52-week highs, they're poised for a breakout. Investors who get in now could see significant gains as the price of silver continues to rise. But here's the real kicker. There's no reason to wait for a pullback. While it's tempting to think that gold and silver prices might dip before climbing higher, the reality is that the risk of waiting is far greater than the potential reward. In fact, the biggest risk is that you wait for prices to come down, only to see them skyrocket instead. With central banks around the world cutting interest rates and devaluing their currencies, the stage is set for gold and silver to take off. And when they do, the gains could be massive. In conclusion, the revaluation of gold and silver is not just a theoretical possibility, it's a likely outcome as the global financial system continues to evolve. The BRICS nations are leading the charge, quietly accumulating precious metals while the West focuses on short-term profits and financial engineering. But the smart money is moving into gold and silver, positioning itself for a future where tangible assets, not fiat currencies, will determine global power. So, don't wait for the pullback that may never come. The future is golden, and those who seize the opportunity now will be the ones who thrive in the new financial era.
Stay informed about the latest developments shaping the precious metals markets with regular updates from the Finance Daily team. Not only that, but as a subscriber, you'll also receive timely silver and gold price notifications and early access to groundbreaking news unavailable to the general public. Join our free gold and silver newsletter today, link in the description.